sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up, guys? Hope everyone is doing well. Perhaps some of you are like, why does his voice sound like it's dying? It's because it is dying. I haven't gone to the doctor, but I'm pretty sure I have some sort of viral infection. I was having like cold and flu-like symptom, like body aches, headaches. Now that's pretty much gone away, and my throat is definitely not as sore as it was, but it obviously I sound like a robot. But hopefully it's not annoying. Hopefully it doesn't bother anybody throughout this video, but go ahead and get it started. This is, as I mentioned on my community tab, this is just going to be a Bitcoin only video. It's going to be an in-depth video, maybe perhaps gathered from the title and the thumbnail, but just going over the overall, my theory, which I labeled Apeiric theory of Bitcoin's price epochs. It's just basically, I'm going to be going over the harmonic structure that I have personally found within Bitcoin when going back on lower time frames and higher time frames and closely examining the flow of price and in a form of a harmonic structure-esque way. Let's go ahead and get it started here. Outside of this initial period right here where price was really not doing anything that was denoting or showing any form of like actual, tangible, reliable, and viable patterning of the price flow. And it really starts, if we go here to this first peak, we see at around 9 to 10 cents of July of 2010. We come down, it's just right here. Obviously, this wick that I'm pointing at is obviously very clearly something that I call an irrational wick, just like this same wick right here that's just insanely large. But after that, we have this moving up to 2, then we go down to 3, 4, 5. I'm not using this in an Elliott wave. I'm not using it in any context, any other bubble of thought that's already been put out on the markets. I'm just using this to denote and to point out the structure that I see in the price personally. But to break it down here, for this 0 to 1, what you will further come to see when I get to the other cycles and progress throughout Bitcoin's history is you'll start to notice this kind of double bottom. We'll see some sideways movement, and then obviously this went sideways for an irrationally long period of time. And some of you might be like, are you kind of stretching out? You're kind of pressing the data a little bit. You're just trying to kind of pull whatever you see out of the data. Not necessarily, because like I said, again, once you go further on out in the price, you can clearly start to see that these are essentially the same. It's just occurring in lengthenings of the duration of the phases, the cycles, etc. Diminishment of returns, terminology that's been around in association with Bitcoin for quite some time. After we get done with this double bottom and this slight, this sideways action, we have this build-up period right here, which just roughly lines up with the previous high right here. And then we kind of consolidate, making 2 notable peaks until we finally have this move towards the second peak of these overall 4 peaks within this cycle. So the cycle, just to go ahead and clearly say it, is from here, beginning of this yellow pattern, all the way at the end of this arrow right here. We go up to our 2, we come down to our 3, we go down to our 4. This right here was the very first iteration or occurrence of what is commonly known as the super cycle, or more technically, according to the way that I view it and the terminology I use and I will use to explain things in this video, it's more accurately a super phase instead of a super cycle, because it's a phase of the overall cycle that I'm showing here on the screen right now. But after we finish this out right here, we go up to our 4 point, and then we just have a slow, slanted, diagonal, brutal bleed off. And I say brutal because it becomes more brutal over time. Like I said, the phases are going to lengthen, turns both to the upside and downside are going to diminish. And then we have our final upwards thrust right here, acting as the most parabolic movement of the entire cycle so far. And that's when we finally break out of this ascending not ascending triangle, but ascending channel that this price oscillated within, leading up to the end of the cycle. After that, we finish here at the 32, just in general, 32 to 34,000, or not 34,000, 32 to $34 in June of 2011. That again ends the first cycle. Second cycle, you can see right here, obviously we have our 0, which is what begins at the end of the previous cycle. We go down to 1, we go to 2, we go to 3, 4, 5. We have our massive blue arrow. So what we can see here is, as I mentioned, I pointed out, we can see this W right here goes sideways for a little bit. We make this build-up period, which is just roughly in alignment with the previous high. Going to make this sideways, this kind of build-up consolidation until we finally have our thrust towards 2, go to 3, 4, slow, brutal, diagonal slanted, bleed off to 5, and then the most parabolic, or the kind of just, I mean, I can go ahead and measure it here. I don't know right offhand, but this move from 1 to 4 was 58,000, and then this move from here would be 12,000. So in terms of percentage gain, this wasn't the momentous from 5 to 6, but it kind of just looks like that. I don't know, at least just personally to me, it kind of just looks like it would right off to the eye be more of a bullish scenario, although it wasn't. So if we actually just go back here, let me just take a look. I want to specifically point out, I've already clearly pointed out the W double bottom of this 0 to 1 period, but if we actually go to this first super phase, so from 2 to 3 of this bear market according to it, so we come up to this high, we come down, and we essentially make this kind of initial thrust towards the downside, and then we see an M form in form of a double bottom. And if we actually just take this to the super phase or the super cycle that happened after it, we'll see the same type of overall price structure. We see this initial downside, we come up, come back down, we come to this area right here, and we just ultimately go down. I could break this into a smaller ABCD pattern. It would still essentially be the same thing. Overall, clearly what is happening is just we are seeing, like I said, we are seeing an initial thrust towards the downside. We come up, we make the double bottom with a smaller micro M in between it, and then we would go up. So this is obviously, it's clearly W, but we see an M formed as the consolidation of the two double bottoms. I've gone over that plenty of times in previous content. It generally just goes back to how W's and M's are the most fundamental way the price will oscillate in really any market, stock market, fiat, even cryptocurrency. It kind of is a universal thing, all in all. So that right there is obviously pretty startling. Pretty clearly, I mean, again, maybe some of you are like, maybe he's kind of pushing the day a little bit, kind of just reaching to grab something out that's not really there. But I mean, we can clearly see, I'll even take a fractal pattern from the beginning of this previous super cycle. I mean, if you just take a look at it, if I stretch it out a little bit, I mean, that literally looks almost, I mean, look at that. That just isn't like a coincidence or, someone kind of just cherry picking the data like I could perhaps be doing. That's pretty clearly the same exact harmonic structure of the flow of price over time. It's just happening over a longer period of time, and the overall bullishness of it is decreasing. Again, lining up with the lengthening of phases, cycles, etc., diminishing of bull runs, bear runs, in terms of the intensity of decrease and the intensity of the increase in price. But outside of that, that takes us to our final, or not our final, I mean, it could be our final, but right now we're currently on the third cycle. But before I do get to that quickly, given the title of the video is talking about the epochs, the price epochs, as I mentioned, so there's two phases within a cycle. First phase would be from 0 all the way to 4 would be the first phase, and then from 4 to 6 it would be the second phase. So two phases within a cycle. If you want to break it down into 3, you can just do basically 0. I'll use actually, so it's basically, if you break it down into 3 phases, we split phase 1 in half. So it's basically, we break it down into the W double bottom, and then we break it down into the ABCD, the super cycle aspect of it. So that's phase 1 and phase 2, and then phase 3 like this. So this kind of like valley formation would be the third phase. But it's just easier to look at it in a 2-phase cycle. So cycle 1, cycle 2, 2 cycles creates an epoch, and it creates an epoch because after the formation of the second cycle, as I went over many points of reason to confirm, it's clearly showing a logarithmically decayed fractal-like occurrence with respect to the first cycle that I went over. And by fractal-like, I just mean it's repeating the same thing again, just Bitcoin's more matured. It's kind of in a drunken stagger. That's something that Willie Woo has said, if anybody's familiar with him, because it's decaying in the logarithmic fashion that it progresses in. It's going to, as again, I'll just reiterate, just we'll see the lengthening of the cycles and the diminishment of returns both up and down. So going to, at the end of the previous second cycle, December of 2017, we start at the end of this blue arrow, we go down and make our first bottom. So one, right now what we see here is we see this double bottom, second bottom lines up with the March crash. We build up, we have this sideways, this build up point till we get essentially just roughly in the area of the previous high. Then we explode to 2, we come down to 3, we go up to 4. That is the first phase W ABCD pattern, or phase 1 and phase 2 if you want to split them up. And after that, obviously currently where we are is as I've been going over, we've broken out of and found, well, we've broken out of a descending or falling, not necessarily descending, my bad, a falling triangle. On here I have it as the pink trend lines. It's a curvilinear falling triangle. Then we came in, we found support along ascending, macro ascending support, as you can see, going back to this yellow range. It incorporates the high of this 2 back here, first high of the second super cycle. It goes through this consolidation area that we saw before we got the major final dump of this previous phase, second cycle, phase 2, the very end of that bear market. This is where we found support in 2018, 2019. It's where the March crash found support, and it's, I would argue, essentially with certainty at this point. Obviously anything could happen, that we're finding support here again, also along horizontal support in association with the high of 2017, or this new cycle, this third cycle that we're on, and also this minor consolidation that we got right here back in December of 2020, along, again, obviously the previous all-time high. So I mean, as I mentioned, we're basically, I mean, we're seeing here a lot of confluence. We are seeing the ascending support lineup / resistance, if you want to think about it as a support / resistance, but we're seeing the ascending, the horizontal, and the descending all converge in the same area, and this is just happens to be so where we're getting the MACDs. Well, I don't have the right inputs here on this chart, but the MACDs, the stock RSIs are all also indicating that there's about to be a massive momentum flip in price, and then what we're seeing is likely a build up to the next bull market. As I said, excuse me, oh, my voice about gave out pretty badly there. So we're going to move up into, just broadly, I think 200 to 300,000. It's going to line up with obviously the second high of the super cycle, so the 4-point. More specifically, I'm thinking probably around like 215 to 225,000 to around 230 to 245,000. I think we'll likely see a double top similar to how we did back here for this first high of what we'd be in. We're still in phase 1. But outside of that, what we would do here is we would eventually, obviously, whenever we come up to this high, assuming what I'm pointing out here, going all the way back to the inception of Bitcoin and its harmonic structure is correct, or at least to an accurate enough degree correct that it will essentially obviously be, in quotes, predicting. I'm not necessarily saying that I'm trying to predict it, but I'm just throwing out an idea that I feel like has a lot of strong reasoning and basis behind it. But we'll come down and then we'll just see from 4 to 5, as I've been going over, we'll see just a pretty brutal diagonal drop in the bear market of the phase 2 of the current cycle 3 that we're in. It will be the worst bear market that Bitcoin has seen. It will be similar to the one we've went through from April 2021 to our current low at around November, December of last year at around 15.5 thousand. As I've gone over plenty of times, So obviously with the whole lengthening of cycles, diminishment of returns, etc., that whole context of Bitcoin's price progression over time, the bear market from this first peak of the super phase or super cycle that I'm talking about, obviously with respect to our last one back here, again from 2 to 3, it was obviously going to have to be drawn out. It was going to have to decrease less to the downside, which is a good thing, but it was going to happen over a far longer period of time, which in all honesty, even though it didn't go down as much, makes it seem far worse. If it's taking longer to reach its bottom, people are going to get more worn out. They're going to get more perhaps even, depressed because, oh, I'm losing all my money. It's just continuing to go down. I mean, it can be very rough. But if you actually compare, so if we go back to, I'll just go and again take another fractal pattern. So we essentially, in order to kind of fulfill this lengthening of the phases, cycles, etc., what we did was, or what this phase, the bear market of this phase 1 right here in terms of the ABCD pattern, what it did was is it copied how it formed during the, see if I can actually, I'm not drawing this correctly, starts from right here. What it did was is it did the exact same thing it did back within the second cycle, phase 3 bear run. So what we can see here is we see this ABCD towards the downside, we see this M double bottom form, and then now we're just breaking out towards the upside. That's exactly what happened back here, come down, but the only difference was is this M currently was slanted towards the downside, and this M right here is obviously essentially horizontally flat. And you can also see we came down, we made this double bottom, a bearish Gartley type of pattern, and then we got rejected. And that is what we did right here, outside of the fact that it kind of staggered a little bit more. Obviously, you can see there's 3 major areas right here where it made local bottoms, and there was really only 2 right here. But overall, it made a type of a W or double bottom by virtue of making this M in between and then finally going up and getting rejected, as I mentioned before, with how you'll see you're not always going to see just a clean-cut direct double bottom. I mean, a lot of the times you'll see it come up and it'll consolidate like this. Maybe it'll even come up and make another W, and then it'll finally come down and do something like this. So what we see here is overall we see this W right here, even though it's obviously an ugly W, it's still a double bottom. We have a bottom, and then we have an upwards momentum, or an upwards switch in the way that the price is heading. And then overall, it's still formed ultimately a double bottom with the lows, the more prominent lows right there. So hopefully that makes sense, and I'm not just, kind of pulling things out of thin air. To those of you watching this and you think all of my ideas are stupid, I mean, if you do, feel free to let me know. I'm not going to be angered by it whatsoever. I mean, I would like any sort of constructive feedback if possible, if I'm going over anything that's just completely asinine. But outside of that, once we finally come down and hit this low, overall, right now, I currently believe that this cycle 3 that we're on right here is going to eventually end towards the end of this decade, as early as 2028, as late as 2032, but with a golden spot around 2030. Just in general, like I said, end of this decade, I don't think it'll go any higher than approximately 1.5 million, more likely around 1.3 million, 1.382 million or something like that. But outside of that, the other thing that I wanted to go over here on this daily chart before I go up to the higher time frame real quick is, again, if you're familiar with my content, you know the indicators I use, RSI bars. I used obviously the pi cycle high and low, and then a indicator called Trader's Reality. The RSI bars are, so you see these turquoise candles on here, you see these pink ones right over here from 2 to 3. They print these candles whenever the RSI gets to the threshold degree in which it needs to be oversold or underbought than it needs to be. It starts printing the turquoise when the RSI gets to oversold levels. It's letting you know, essentially, like, for example, clearly what it's pointing out here, and well, I'll go ahead and use this and I'll just build up. So you can see we start to print these turquoise candles for the most part all the way back here, which is kind of why I didn't really want to use this, but Obviously, you can see the turquoise stopped to print at these highs. We come down, we pin a pink at the bottom. Once we start to get back towards the highs of this kind of switch in price from this upside towards, so we have our, my bad, a downside, we hit our relative local high, then we come back down again. We see a pink vector printed right here. That's where that irrational wick was. If I even mentioned that, this is obviously, this is an irrational, this is what I call an irrational wick. This also right here would also, this would be an irrational wick. You can, just doesn't make any sense because it's so massive. Then we see right here this massive candle right here that deviates from the norm of this entire sideways consolidation. We once more get a turquoise printed. We zoom in here, we can see we got a pink printed, two pinks printed right here at these lows right before, once we start to flip into these turquoise, printing in this bull run, or this momentum switch in price towards the upside in a bullish manner. Start printing turquoise, pink. You get the idea. Pink leaning into bottoms. These print start to see green. That's giving us some possible hope. Then we flip turquoise, and that's likely, or not likely, but essentially saying, hey, this is probably a very good time to buy. Not always, but most of the time. Then we come up, we pin our pinks right here. This would also, this could perhaps scare you. You know, see, you start to see these pinks, you're like, oh no, it's about to like have an onslaught towards the downside. These aren't always something you need to be like super scared of if you're gonna use these indicators that I'm talking about. Especially if we're already starting to see a massive switch in the momentum. And you can use things like the RSI, MACD, stock RSI to further validate the fact that we're not necessarily just heading to some sort of squinty, some sort of small reverse relief reversal, but more so an actual bull run. And then you see we start to flip back into turquoise. We stop printing our turquoise here at the 4 and immediately start pinning the pinks. So what I'm mainly trying to get across here is what the inputs I'm using on this daily. This is the index chart, just to quickly flash them if you want to use them, if you find value in what I'm showing you. Length 4, up level 72, down level 33. Those are the only inputs for this. Again, the RSI bars indicator, you can see once we get flipping to turquoise, we get a pink down here at this low, local low. And then we start to get purple candles. Purple candles are a part of the trader's reality candles. These candles, so it's the purple ones. Goodness, I actually forget. So purples, greens, and reds, and the yellows are the trader's reality. And these are volume-based vector candles. These are printing with respect to volume. Whereas I said the turquoise and the pink ones are printing with respect to the RSI being oversold or overbought. So you can see right here, we get these volume candles towards the downside. That right there showing you that you're probably going to want to get out of the market. I mean, obviously, you can see what the price did from 5 to 6 at the end of this arrow. You see that, you probably need to get out. Especially once you start to see these pinks you haven't gotten out yet, you really need to get out, according to this at least. Again, which goes back to those inputs I showed you. These specifically here on the daily chart will show you when, on a more zoomed in time period and frame, when the actual bull market or bear market is ending. You can see printed pinks all the way down to this double bottom, flipped up into green, turquoise, started to print pinks again. As you can see, printed pinks as we kind of let up right here. And once we stop finally printing them, that's when we got the price to actually flip above these moving averages. And also the moving averages were converging as well, which is obviously, you see these turquoise printing, pinks have stopped printing. We see all the moving averages converging. That means some sort of momentum is about to be released, whether towards the upside and the downside, and the candles are leaning towards the upside. Again, we can see pinks in a turquoise in the pinks, back in the turquoise. Obviously, hopefully at this point you get the idea. It does the same thing if I were to go all the way up to all of these. Zoom in here at 4, you can see as soon as we get this pink right here, it insinuates the bear market. We go all the way down, stop getting our pinks right here, or, well, eventually we do. This is a long bear market, I forgot about this, but we get them all the way down. So here, as you can see, we finally stop printing them right here in this area. Flip into the turquoise for this time being right here. We started printing them again. Obviously, these aren't foolproof. You can definitely still get majorly screwed over by using this, but it does kind of help you to get an idea of the overall momentum of the price over time. We zoom in right here again, you'll just see the same thing. It's mainly just useful, in my opinion, for pointing out the highs. I'm not really concerned about it pointing out the lows, as I've been going over, because that's something that I personally look for confirmation more on the higher time frames. And then on the lower time frames, I would say that's really more important for the highs, because you want to sell right obviously at the actual high, and a higher time frame, even though more valid and more useful, could perhaps not really give you the best picture. But again, you see pinks leading all the way into the bear market, all the way down here. We get our pi cycle low. Then we start to just move back up here towards the upside. But again, hopefully you get the idea there. It's pretty clear and pretty straightforward and simple. Outside of that, the other thing that I wanted to do was just go ahead and go back up to the monthly chart and just go back over the analysis that I've drawn up here on this chart. So looking here at so just taking into account what I just got done showing on the daily. So now we're at the monthly, and we can clearly see here on this RSI, which I was talking about earlier, it looks, I mean, this is uncanny where I mean, I really don't even, there's not really any words I could use to better describe what you're looking at. It's pretty clearly there. We have not only broken out of this lowermost white range, this descending range of support, and we've broken through the I think this is the 786, the turquoise one, but the this teal kind of green one's the 618. You can see we've also now gotten above, and actually if I switch, I found this interesting when I was looking at it the other night, because I try to look at all the charts and then kind of prepare in my mind what I'm going to say beforehand, even though sometimes I don't even end up saying what I'm thinking in my head beforehand. Anyways, what I was doing was I changed it to the, let's see here, where are they at? The circles. And what I find interesting is you can see we've solidified, well, I guess technically not necessarily yet. We still have 5 days left in this month, or this monthly candle at least. So, I mean, we could end up, especially the fact that Bitcoin, as I went over in my previous video, seems likely that there's still full total possibility we see them price move down to 25, 23,000, which could, close another dot below this black line, horizontal line at 52. But if we just go back here, we can look right here. So right just above this pink circle I've drawn, once we close the first purple dot outside of bull run confirmation according to the RSI, we did the same thing here in 2016 after that 2015-14 bear market confirmed the bull market. It did the same thing right here for the intermediate relief rally up to around 15,000 back in just before the March crash. But again, so if we just take a look right here, we can see we've closed this dot outside of it. So I think that's insanely interesting to see as well. It kind of shows a little bit more proof, in my opinion, rather than just looking at it in this line basis. But so each of these vertical dashed or dotted lines that you see are correlated RSI and to the MACD. It lines up with the overall bottoming of the RSI, breaking above the yellow, or my bad, not the yellow, the white range I pointed out, the descending white range. It also lines up with the momentum reversals that we see every single time here on the MACD. See right here clearly in our current year. We go to right here. Did I lock my cursor? Is that what that is? I can't stand it when I do this. You know what? I don't even know where it is. That's because it's not that. All right. I just had a very stupid moment there. Anyways, to continue, again, if I go all the way back here to 2015, you can see as soon as we get this momentum reversal, the bull run starts. It looks nearly identical each and every single time, just like I pointed out with the price harmonics essentially looking identical with the factor of maturity and decay over a period of time. It's essentially doing the same thing. And that's what each of these boxes, or these cubes, as I pointed out in my previous video, line up with. And I did it like this in this artistic way. These cubes are basically, it incorporates the overall kind of the RSI, the derivative indicators, printing the switch and the flipping of momentum, and then the yellow line, the green line, and the pink line you see associated with each of these boxes lines up with the yellow, the green, and the pink, the ascending support resistance, horizontal support resistance, and then the descending support resistance, also in the form of, like I said, the falling triangle, or it looks more, it's a curvilinear falling triangle to be more precise. But and not only does that line up with everything else that I pointed out, will also, as you can see, each of these pi cycle indicators are, it's the exact same thing as well. Just to go ahead and point it out here, you can see the turquoise and the pink candles also, again, just painting a very clear picture. You can see turquoise and the pink get the pi cycle indicator that lines up with the MACD RSI as well, flip into the bullish mode. Same thing right here, 2018, 2019, and same thing currently what we're seeing now. And we're also, as you can see, I think I've already mentioned this, but this is the first turquoise we've seen. So, I mean, if you go back and you look at literally in the entirety of Bitcoin's price structure history, this is full confirmation that the bull market is beginning and the bear market's actually over. These candles right here I've been using more recently with this higher time frame chart because they more clearly show the picture, in my opinion. But if anybody's again interested to use it, the inputs I'm using are still just 472, 73. That's for both the daily and the monthly. On the monthly, it shows you more of a precise bear market range. On the daily, it shows you as soon as it flips into bear mode after the all-time high, like I was mentioning earlier. The pi cycle inputs that I'm using are 464, 307, 364, 116, and then the time interval is set to the daily. So again, these are just what I use as well to get it specific. This is the most accurate way that I've found to do it out of all the numbers I've tried so far. But outside of that, just to quickly reiterate here, just to show further confirmation that the bear market is very likely over and the bull market is already in its early moments of ensuing. We've, as you can see, we get the very elegant patterning of the vector candles. We break above into this Bollinger, this moving average purple range of the pi cycle indicator right here. Another confirmation. We see two greens leading into a turquoise right here. Go to 2018, 2019. Two greens, turquoise, bull market began. No more lower lows were set at the very least. I mean, we might still get an intermediary low. Perhaps the structure that I mentioned on the daily chart isn't as accurate as I laid it out, and we actually get an intermediary high. Like, for example, let's say that we move up like this and we reach these previous high levels right here. Maybe we even extend towards, 85,000, but then we come back down and we find support on like 30,000, and then we finally go back up to these highs. What I'm expecting more is we're literally about to see a straight up parabolic move like we did from March to April 2021, likely seeing another type of, as is pointed out right here pretty clearly, a type of double top formation. And that is what we've done currently here with the candles as well. We've completely blown through it. We have opened and we've closed with well, we haven't closed yet, but we've closed and we've opened. Closed the previous candle, open our current candle, right smack in the middle of this range, which is very good to be seeing. We are seeing, as you can see, every single one of these moving averages right here are converging to the general range of around 24 to 26,000 with a midpoint of around 25,000. Obviously 25,000 is very important. You can see that the moving average, the turquoise one, the blue one associated with this purple band right here, literally just went sideways along 25,000. Obviously 25,000 is where we bumped our heads at right here during August, July of last year, and that's what we built up to right here, January, February of this year, in order to the first relative high of the breaking out of this curvilinear falling triangle. This again, another bullish pattern. There's another avenue of confirmation of what I am trying to go over and explain in this video quickly. Another thing that I just want to go ahead and point out here, since I'm going over Bitcoin, I'll find it here eventually. Here for this 2-day chart, I just want to go over the lower time frame here again once more. We are likely going to see, if I had to guess, at worst case scenario, a test back down to this white range, perhaps just towards our purple band. In general, it's encompassing the entirety of the purple band, 26.5 all the way down to perhaps maybe we'd see some wicks down to 22,000. Maybe we'd even see some wicks down to this 800 EMA moving up, so around 21,000. And that would be wicks. If we start to close and open significantly below 22.7 thousand, that's likely not going to be looking too good. And then especially if we start to close, open, etc. on like the daily, the 2 daily, the weekly especially, and obviously the monthly below 20,000, that's perhaps we're going to see this red pattern play out towards around, I mean, if we go lower, I mean, anywhere from 15, general 15 to 10,000, worst case scenario. And just to, again, reiterate quickly here, if we follow through according to the structure I mentioned on the other daily, or the previous daily chart that I really went over, the harmonic structure of Bitcoin, we will come to meet this broad $200,000 to $300,000 range towards, if we see the double top type of formation, first top being around 215 to 225,000 approximately, give or take like $5,000. We'll see that more towards like very, very end of this year. More likely, most of the brunt of that ranging within that high range that I mentioned, January, February or so of 2024. We'll see a retracement similar to how we did back here. And then what we'll do is we'll basically, that's what we'll see right here. We'll see a retracement from these highs, come down, and then we'll move back up towards like 230, 245,000 or so, more towards around 6, 7, 8 months into 2024. But outside of that, that was really all that I wanted to go over and touch on in this video. It's only 36 minutes. I surprisingly got it across quicker than I thought I would. I guess at this point, I mean, I put a good amount of thought into it. I mean, I first saw the internal, or the intrinsic phase cycling structure of the epochs of Bitcoin around 3 years ago. And then, I mean, there's been many points where I've been wrong. Like, for example, you know, just to point out my thoughts, obviously, I've been doing analysis for over like about 3 years at this point. So perhaps that's like, oh, wow, we shouldn't listen to this guy. He's only been doing it for not that long. But anyways, I mean, obviously there was good potential that this bottom right here could have, you know, I mean, for all we know, anything could happen. This could have led to the next, what I'm talking about, this move towards 200, 300,000. So back here, after we met the bottom right here, I was entertaining the fact that perhaps this is it. And we do, you know, we get that move up towards 200, 300,000. I did the same thing back here for around 40,000. Perhaps, you know, it's still a possibility that we see this is the final bottom right here. Unfortunately, we didn't. And I'm back here in this low range from January, February, March 2022. There was plenty of good reason to think, or at least lean towards a high likelihood of that happening. Obviously it didn't, and it was wrong. And then right here also I was entertaining, hey, I mean, this could have possibly been, you know, that could have been it. So right now we're here on this fourth point that I have been entertaining. Obviously at the end of the day, it doesn't matter how much you're right or how much you're wrong. It just really, trading is what I'm talking about here. It just depends upon the patience and the discipline you have, the strength of your mind, of your soul, in accordance to that patience and that discipline, that each time you're wrong, and like it continues to go down, not to just be like, I literally don't know anything that I'm talking about, you know, not to get, you know, down in the dumps. Like, if you're just going to do that to yourself, then you're never really going to get anywhere in life in any aspect of doing anything. So I just wanted to point that out, just to kind of, you know, not make it sound like I am just talking about, oh, this is going to happen, blah, 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 this and that. No, there's been, like I pointed out, outside of this final fourth time, which lines up with our actual low right now at around 15.5 thousand, as I pointed out, there's been 3 other times where I was entertaining with more of a tenacity behind it, that perhaps this is the bottom and we start to move up towards 200, 300,000. I mean, I entered the market all the way back here at around, it was in the year of 2020, towards the second half. So right here, as we got this first upwards move towards the 2021 double top. So, I mean, at the end of the day, I could be absolutely wrong again. Although, out of all these times, these four moments, these four lows that I mentioned, where I was felt pretty confident that this could be it, this is definitely by far being the fourth point, the most confident that I have been. I'm sure many of you would probably agree with me as well. Things do look very good, and there's also a lot of other people within the space that think so as well. But once more, outside of that, again, that was all that I really wanted to go over in this video. Hopefully you enjoyed. Again, if any of you have any questions about anything I've gone over, if you have, some criticism, whether it's constructive or it's rude, I have my comments open to anything. If you want to say what you want to say, by all means do it. I don't care. But just let me know what you think about it. If it's, asinine, if perhaps it makes a lot of sense. But hopefully you enjoy the content. Hopefully you're able to learn something from it and add some sort of tool to your trading scheme. Again, none of this is financial advice. I'm just going over my ideas because I just find interest and joy. Just kind of looking in the charts. It's just an intellectual thing for me. It's just really fun. I mean, that's as simply as I can put it. It's just fun to me to kind of put together these ideas that have a lot of sense behind them, I personally believe. But all that being said, I hope you all have a blessed day.